Let's kind of dive into Operation Chokepoint. Can you kind of explain what that is to the audience that hasn't heard about it? And is it a problem for Bitcoin and Bitcoin companies or even crypto companies too?
Yeah, for sure. So Operation Chokepoint 2.0 is coined by Nick Carter. And essentially, it's used to describe this recent regulatory crackdown on crypto institutions and whether it's their ability to operate, sort of going after them with securities law, or whether it's severing ties to traditional banking outlets. Essentially, the name of the game is to basically make it extremely difficult for Bitcoin and crypto companies to operate and sever their ties to banking partners so that there are no U.S. dollar on-ramps, and they really have no ability to operate because of that, right? They can't accept user deposits, because of that. It makes it extremely hard if you don't have a banking partner that allows you to be interoperable with U.S. dollars. And one of the biggest instances of this is JP Morgan today, and I tweeted about this. JP Morgan severed all ties with Gemini, and that was one of Gemini's biggest banking partners, and now it wants nothing to do with Gemini. It was one of its biggest banking partners, and the other big banking partner for Gemini was Silvergate, and now Silvergate is unfortunately going under, or at least it very much seems like it. Yields on Silvergate senior secured notes are soaring through the roof. That's getting sold off very, very quickly. Its stock price is down very tremendously, and so people are really betting on some kind of bankruptcy coming from Silvergate, and you're seeing them having a great deal of struggles. And they were one of the leading banks. They were the leading bank for Bitcoin and crypto, quote unquote, and so. Basically, it's severing these crypto firms, these Bitcoin firms' ability to operate as companies and regularly accept user deposits and operate as a business because they're getting cut off from U.S. dollars and dollar interoperability. And so, Silvergate had it serviced a lot of players that everyone knows about, right? Coinbase, Kraken, Gemini, Genesis, which is now a whole nother story. They serviced, I believe, FTX. They serviced Circle. They serviced Binance, Paxos. All of these entities are serviced by a very select few number of banks that are willing to, do business with them. Silvergate was one of them. Prime Trust is another. Prime Trust does, I believe, I don't want to talk out of turn here, but I believe they do Swan's banking. I believe they're Swan's banking partner, and they are Strike's banking partner, right? And so, these banks that work with crypto institutions are now going under in the case of Silvergate, or severing ties entirely in the case of the more formal traditional finance, JP Morgan. And so it's really not good. And the idea of Operation Chokepoint is that this is basically the regulatory authorities within the United States taking everything that happened in 2022 very opportunistically and seeing it as an opportunity to finally crack down on this crypto fraud, these crypto scams that have really, really harmed consumers. And in the case of frauds and scams, that's actually a good thing. That's a great thing. But by the same token, these dollar on-ramps are the same ones that service good faith Bitcoin institutions that aren't trying to do anything scummy, right? Institutions, and again, I don't know who these people's banking partners are. I'm just giving examples of good faith Bitcoin institutions, like Swan Bitcoin, like River, like Strike. All of these institutions are literally saying, they say regularly, after you buy with us, take your coins off the exchange. That's a good entity by all accounts, right? A lot of these entities have gone to regulatory authorities and said, hey, can we have some more clarity here? We'd like to be folded into the window. Here's all the information about what we do, right? And they get bundled up with these scams. So from the standpoint of cracking down on crypto scams, right, Operation Chokepoint is a great thing. But from the standpoint of cracking down on good faith institutions that don't have any harmful predatory products, which tend to be Bitcoin only institutions, funnily enough, they're also being bundled in with those scams. So, we're taking the good with the bad. It's sort of, we're basically being forced to eat our vegetables, right? We've already eaten our vegetables, but alongside with these crypto institutions that are now, the regulatory authority is really hammering them, rightfully so. Bitcoin's being forced to eat its vegetables a second time, unfortunately. And it's just the unfortunate reality of being associated with crypto rather than being, thought of as two separate asset classes, which you and I both know that they should be.
Yeah, you touched on FDIC insurance and Silvergate. I've heard before that FDIC insurance insures like basically 1 to 2% of like demand deposits, like for, I guess, all US banks. So in reality, like there's not much actual insurance backing everyone's demand deposits, even if, of course, like if every bank failed, like that would just be catastrophic. It would probably never get that bad because there would be bailouts anyways. But I wonder if Silvergate actually did fail or got close to failing, how much of a dent would that make in FDIC's, like insurance fund, I guess, if they call it that? I don't even really know. And you may not have an answer to this, but curious, do you have any thoughts on that?
Yeah, so it certainly wouldn't have been good, right? If any bank fails, and they have FDIC insurance, and the user, the users of that bank, the people who have deposits with them, the FDIC has to pay those out. It's obviously a pretty big dent into what the FDIC pays out, and so it's not good. And so potentially, the idea of Operation Chokepoint 2.0 is that this is somewhat deliberate, right? This is somewhat a coordinated, deliberate crackdown. And what you're saying could be true. It could be, the simple fact that the FDIC is really seeing all of this risk boiling under the surface, and they don't want anything to do with it. And so not only are they, really disallowing these good faith Bitcoin institutions from coming into the regulatory window and becoming FDIC insured, but they're also taking a look at some of these institutions who they have afforded FDIC insurance and saying, let's make sure that these institutions go under now before they get much larger, and therefore they pose a much larger risk to us if they go insolvent and we have to pay them out. So you're right, it could be a savvy decision on behalf of these authorities who would be responsible in cleaning up the mess and saying, before this balloons out of control, let's take it out behind the shed and put a bullet in it. It could very well be that.
Yeah, it's interesting. I also imagine that like Silvergate doesn't have like JP Morgan probably has, millions and millions of small clients that all kind of each of their accounts adds up to the $250,000 FDIC limit. Whereas I could see Silvergate not having that many clients, but like each client has like millions and millions of dollars in their account. And so it's like FDIC really isn't covering, like it's not a big hit because there's just not that many clients that they have to pay out.